Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm Nydia and you're watching Indian Open on a day when the markets are likely to start off slightly lower. Let's take a look at the headlines at this hour. No Monday morning cheer for Asian markets after Japan posts a sharper than anticipated contraction in third quarter GDP and posts the world markets looking soft. Crude prices trade only marginally higher despite oil producers agreeing to a cut of 1.2 million barrels per day. Exit polls predict a Congress win in Rajasthan, project a fight to the finish in Madhya Pradesh and Chhattisgarh. TRS may manage to hold on to Telangana while Mizoram looks set for a hung assembly. And former Chief Economic Advisor Arvind Subramaniam expects universal basic income to finally mention in all political party manifestos for the general elections. That is a Bloomberg Quint exclusive. Well, let's take a look at the trade setup for the day. Firstly, the news around the world. There are two or three big pieces of news. Firstly, the OPEC meet, the two-day meet, which seemed inconclusive in Thursday's session, finally has some conclusion in Friday. For all those who've missed the news, OPEC and the allies have agreed to cut oil production by about 1.2 million barrels per day. This brought about a bit of a reaction immediately, and in today's morning session as well, marginally higher, but a bit higher than what was earlier anticipated, the production cut, and that leading to an impact on crude prices at about 62.11 for Brent crude. Then on something that's both China and the US and arguably the world are watching very closely, the Huawei CFO Meng has been charged with conspiracy to defraud. So that piece of the puzzle is not going away anytime soon. Do monitor this news individually as well, because it could have a bearing on the sentiment around the trade deal between US and China. Thirdly, because of that and just the sentiment getting spoiled, I think the US markets have come off very, very sharply in the last 4 or 5 trading sessions. In 1 week alone, I was reading this Bloomberg article which spoke about how the US markets have lost about $1 trillion worth of market cap in 1 week alone. And it's a terrible start to the month of December. I'll pull up a chart which will show how the last 3 weeks have been nearly terrible for the US markets, the worst weeks in a really long time. So they've kick-started the month of December with steep losses. And we're not approaching the holiday season with much fanfare or gusto, at least in the US markets. And that is having its bearing on the world markets as well. Frankly, if you just take a look at what's happening across the world this morning as well, Nikkei is down about 2.2%. Shanghai and Hanxiang obviously should be down about 1.5%. The SGX Nifty, which rose marginally on Friday, I reckon because of some bit of short covering as well, which would have been existed out of the exit polls, is showing a downtick of 142 points as well, in line with maybe what the world markets are doing and also in line with what the exit polls are suggesting. Frankly, if you just look at the trade setup for the day today, I think those are the two most important parameters. One, the global sentiment, and two, the exit polls outcome would keep the markets subdued in trade today. Most experts that we've spoken to across equity markets and money markets believe that the currency may be under pressure due to the crude price uptick. So 70.80, we might nudge the 71 mark on open today. That's what most experts believe. And most experts also expected the bond market rally to take a bit of a breather. We've had a fabulous up move in the bond prices. As a result, the yield has corrected all the way to 7.46. I think a lot of people anticipated 7.50 to be a given, and then trade between 7.50 to 7.60, depending on, of course, how the state election outcome is. But broadly, because of the crude price uptick as well, we'll have a bit of strengthening of the yields in the next 2 or 3 sessions. So do watch out for this, and do watch out for the index as well. Despite that uptick, we sub the 200-day moving average. That circle that I've put out there, that's below the 200-day moving average for the Nifty. It might trade convincingly below that today, and if it manages to do that for the next 2 or 3 sessions, then we could still have, or we could well have, some bit of a downtick, some bit of a lower levels opening up on the trading ranges for traders. So do watch out. It could be an interesting next 2 or 3 days. The world markets are soft. We have every reason to be soft as well. However, we'll get to know about it when we get to know about it. For now, the stocks that are likely to react at 9:15 a.m. in line with the markets, I think most things will start off lower. But stocks like HPCL, BP, IOC, or the paint companies like Asian Paints, or the tire companies have one more reason. Because of the crude uptick, we could well see a bit of a sentimental downtick on each of these names and the related names in the oil marketing space or the paint companies. So do watch out for these. Do watch out for the sugar pack as well. Reiteration by the oil minister that ethanol blending in petrol would double to about 8%. I think he was speaking at an ISMA event, and that might well, bring a bit of cheer to these names. However, the market is soft, so don't quite know what kind of positive reaction would come in. And I was trying hard to figure out what could react. Maybe RBL Bank too will not react, but it's an interesting note from Axis Capital on RBL Bank. They are maintaining the buy, but they've hiked the target price to 660 from 575. They reiterate the long-term outlook and belief in execution capability of the bank. Do watch out. Soft day today. Maybe, just maybe, the stock might start off well as well. So 2 or 3 names that you got to watch out for. However, let's tell you what's lined up on First Word today. Naturally, the most important element, the poll outcome in 5 states, which will take center stage in India, at least for the next 2 days. We first take you through what to make of the exit polls that came out on Friday as we await the actual numbers tomorrow. And then just what the market experts are making of the exit polls. Next, all producers have zeroed in on a higher than anticipated cut in crude production, but it may not have had the desired impact. We speak to Jonathan Bharat of Ayers Alliance on that. And then their ambition to make Zee Entertainment a global media company may be just one of the reasons why the promoters are looking for a strategic investor. Debt on the parent company's books may be another. Sajid tells us why. Okay, tomorrow is going to be a nail-biter if exit polls are anything to go by. The Congress has played catch-up with the ruling party in at least 3 of the states. Its newfound love for the TDP may not get the alliance over the bar in Telangana though, but its exit polls after all based on a very small sample size. So one should be careful in extrapolating the numbers that much. Tamanna Inamdar and Kaushik Bhatia wrap up the key takeaways from the poll of polls.
Well, the exit polls after the last vote has been cast present a very interesting picture before result day when we will know the outcome of elections in 5 states. Let's take a quick look first at what the key headlines are out of these exit polls. Here, Kaushik, I think important to note that we've picked a specific set of exit polls,
That's right.
narrowed it down, and this is the picture we've come up.
These are agencies that have carried out exit polls over a number of years, and those that have seemed to have had a sample size that's broad enough over the years to reach a point where you think that you can get that and put that to our viewers. 5 key points here. The first one is that in 2 of those states, the Congress is seen as getting to that halfway mark. That's Rajasthan and to an extent in Madhya Pradesh. Remember, these are both states that in 2013 the Congress lost very badly.
Yeah, and in Chhattisgarh is a very interesting situation where Raman Singh seems like he will scrape through once again. We'll come to all the details in that, but first the headlines very quickly. It also means that BJP could face a setback, a pretty huge one in the Hindi heartland of Madhya Pradesh, Chhattisgarh and Rajasthan. And the Congress may take away 2 of these 3 Hindi-speaking states, which will have a huge impact ahead of 2019. But let's come to Madhya Pradesh and we'll go through each of those sets in a bit of detail. Madhya Pradesh would be the big surprise because even a couple of months ago it seemed like Mamaji, Shivraj Singh Chauhan, would come through for a 4th term. The polls don't say that too clearly.
So let's look at them, right? Very quickly. You have 1, 2, 3, 4. 4 of them showing a healthy lead for the Congress. That halfway mark is 115, 116. There's only one that's giving the BJP a win, a clear win. The rest of them are showing the Congress ahead. So when you tally that up, it's showing the Congress and the BJP. Remember, this is an outlier number, which is what's skewing this towards...
You know, just a note, which is something you don't see in the graphic, Access My India shows pretty much the same header,
right.
but it gives a 1% extra vote share. They've done a vote share prediction as well. So they give 42% of the vote to the Congress and 41% to the BJP, which is why we're saying 3 out of 5 show a Congress win, 1 neck-to-neck position. It is something which will definitely make the BJP uncomfortable.
That's right. And any of the others are parties necessarily that you would think that are more amenable to the Congress's smaller parties than the BJP having run the state for the last 15 years.
Well, it's unlikely to come to a split verdict, but then we'll see how clear this is. Let's move on to Rajasthan. Now, Rajasthan, you know why I find Rajasthan very interesting, Kaushik, is because in the last week or so, there was this narrative that the BJP has managed to pull it back.
You did hear that because you heard of let the Prime Minister go in for his slogovers campaigning, for his carpet bombing of rallies that he's known to do in state after state. So you got the sense from BJP workers saying they were waiting for that to see if it could be clawed back. This is a state that was seen as one that was slipping out of the BJP's hands a few months ago. Raji did get her way in choice of candidates and things like who she wanted and how this election campaign should be run, and not from Delhi. But that said, those numbers are pretty evident.
Those numbers are actually very evident. There is only one poll, Jan Ki Baat, which is giving the BJP really a very marginal position and a lead over here with 83 to 103, which is a range. I've also noticed this time around, posters have been careful. I feel they've been careful.
That's right.
You know, where they're trying to show a direction but not sticking their necks out, and possibly because this is such a close contest.
Correct.
And such an important set of election numbers as well. Let's go to Chhattisgarh. Chhattisgarh is fascinating because in the last minute you had a googly of sorts with Ajit Jogi and Mayawati coming together for a combination. It seems to have not done much harm to the Congress or the BJP, but they could be seeing themselves in a very important role in a couple of these polls. At least the Jan Ki Baat one is one where they could have an important role.
One caveat about this, right? And you brought this up in the piece on BloombergQuint.com that you put up earlier this week, that the margin of vote share between the Congress and the BJP in Chhattisgarh has been very narrow. And for the last 3 elections in this state, for much of the day, you don't know who's winning in Chhattisgarh. 2003, 2008, 2013, I can tell you that. Having watched that, you didn't know who was winning the state. And it's only in those last few rounds, watch for Tuesday, that you might see a breakout in one party's favor. These are parties that are fairly evenly divided in vote share, as have been for the last 15 years.
You know, I'll just end that with one, quote that Ajit Jogi gave to me when he spoke with me yesterday. He said, Raman Singh is born lucky.
Is it?
He manages to scrape through every time. Do go on BloombergQuint.com and watch that interview. Let's see if he's 4th time lucky. And that's what most of the pollsters are also saying. Let's come to Telangana. Telangana is also a very interesting one because the moment you had INC plus TDP, arithmetically they were ahead, but most pollsters seem to believe that KCR will pull through.
This one is interesting, right? Because the Congress was notionally with the TRS when Telangana was a state that for many of those years was a request or a demand that KCR had, leaves the UPA, forms a government in the state. The TDPs, this is a bit of this would also be a state that's hard to poll.
Yeah.
Right? Because the TDP was with the NDA till 6 months ago. They've joined with the Congress now. So this whole, when parties that are inherently parties that have seen each other as rivals come together, I'd find it very hard for a pollster to find out if there's any voter transferability or not. So I'd say of the 5, this one's the tough one for any exit poll to get right.
No, but they stuck their necks out. And in fact, Axis My India is giving them 91 seats on the upper limit. KCR has 90 right now, but he won 63.
That's right.
So all of those were people he pulled out of TDP and Congress. Let's see if this happens. Telangana again close to call, but as of today, it seems like KCR's gambit of pulling the plug on his government 9 months early may have paid off. Mizoram. Let's come to Mizoram as well. We have 2 polls over here with predictions, and both of them show the Mizo National Front ahead, but not by a massive margin. You need 21 to form the government, and they may just cross through. The others will play a significant role here.
So this part, right? The MNF is a party that's seen aligned to the NDA.
Yes.
So,
but not in the state.
Fair enough. The narrative, if the Hindi heartland is protected, then, and if this one comes into the MNF, then the Northeast, the narrative will be, is free of the Congress, is what Amit Shah, Narendra Modi and other leaders will go to town saying, look, this is now a region that is in complete control of the NDA and would go on, as they would say, on the development model that they want to take it on. That's the one state that the Congress still has in the Northeast. Let's wind back to why this election in 5 different states in 3 different parts of the country is so important. So let's go back to those 5 key points and the points you made about this.
Yeah. You know, BJP leaders today will be having a very uncomfortable time right till the results are announced, because if they lose the Hindi heartland, then even some kind of a proxy gain in Mizoram is not going to cut it.
Exactly.
65 seats between Madhya Pradesh, Chhattisgarh and Rajasthan. They had 62 of them in 2014, and that's an important chunk in the context of 2019.
No, it's pretty much everything, right?
Yeah.
These are the states, along with Gujarat, and to an extent, UP, they did lose five seats. These are the 7 seats in UP. These are the states that they swept completely. All in Gujarat, all in Rajasthan, other than 2, all in MP.
We don't know if state votes will transfer, but the long and short of it is that whatever happens on result day, it is going to change the perception for both Rahul Gandhi and Narendra Modi.
Which is what had happened 5 years ago. When these were states that the BJP swept, you realized the extent of what was coming 6 months later. So as you said, and these are samples that different polling agencies, remember, these are samples that different polling agencies have put together that they think are representative of the electorate. You will find numbers coming in different bursts on Tuesday. Through that, you will see probably numbers consolidate over hours. So this is not necessarily an election that you get a clear trend on immediately, or immediately in the first hour or 2 on Tuesday. So keep watching Bloomberg Quint, and we have a special election page for you this time around, on which you'll be able to get your hold of some of that data, see what you want to see, and read a lot of in-depth analysis.
So do stay tuned, and we'll see you on Tuesday.
Good.
Well, let's wait and watch as to what comes out there. But if you needed answers to what to make of the exit polls, you now know this. Most market veterans expect, of course, the market veterans that we spoke to, of course, expect Indian equities to open lower today after the exit polls for the 5 states showed Congress in the lead. Yeah, I've taken 2 or 3 of those who have given their verdict on what to make out of these exit polls. So let's start off with the first one, and this is Sanjay Dutt. He says exit polls are not good news for the markets. It appears that the ruling party in all 3 important states is facing anti-incumbency and thus will be voted out. While markets have been fearing this and have discounted the outcome to quite an extent, the exit polls themselves further reinforce this view in the backdrop. Markets are likely to be weak on Monday. He speaks about what could happen today. Nirav Sheth, of course, goes ahead and speaks about what could happen over the medium term as well. He says that BJP losing the 3 states seems like a possibility, and that could mean a correction of 3 to 4% in the markets over the next 2 or 3 days. If the BJP performance is subpar, it could make the opposition coalition harder to take shape. That is the only positive. Last but not the least, on the money markets as well, Anand Bagri spoke about how the exit poll results could act as a trigger for the unwinding of the sharp rally in the money market scene over the last few sessions. We can expect the 10-year bond yield to stabilize between 7.5 to 7.6% in the near term. So do watch out what could happen to equity markets and money markets. Frankly, it's all about elections the last couple of days. However, the other big important piece, of course, is oil. Oil producers have agreed to cut production by 1.2 million barrels per day. OPEC and the non-members arrived at consensus late Friday evening, spurring crude prices for a short while as the quantum of the cut was higher than anticipated. Russia, which was instrumental in deciding the size of the cut, believes this should be enough to address oversupply concerns in 2019. Russian Energy Minister Alexander Novak spoke to Bloomberg's Anne-Marie Horton.
As of now, the decision is made for 6 months. If needed, if we see that the market needs this cut to continue, we could extend it. We have this option. But at the same time, if we see that the market needs more oil, we have all the instruments in place to make adjustments. We're flexible.
Bloomberg's Aaron Clark sums up what other oil producers had to say after the decision was made.
This deal caught a lot of people by surprise. Again, the OPEC Plus group, which includes Russia, said they would cut production by 1.2 million barrels a day starting next year for 6 months. I think, you know, initially a lot of people didn't think this would happen. Saudi Arabia's Energy Minister Khalid Al-Falih said on Thursday, you know, he was very dubious that a deal would get done. But then once they announced the deal, the agreement on Friday, prices really jumped. Brent jumped as much as 6% to around $64 a barrel before pairing those gains and trading right around $61 a barrel. But I think that this deal really speaks to this growing, this deepening relationship between Saudi Arabia and Russia, two of the world's largest producers. They worked together on the earlier cuts that started in January of 2017 and lasted for about 18 months that really helped clear global inventories. And now they're going to do it again. Of course, it includes the other members of OPEC, and there were some exemptions for Libya, Iran, and Venezuela. But again, this really speaks to this growing dominance and growing relationship between Saudi Arabia and Russia, and they're really willing to work together to manage the oil market.
Let's get an outlook on crude oil prices from Jonathan Bharat. He's Chief Investment Officer at Probus Securities. Joins us on the phone line from Sydney. Jonathan, good morning. Thanks much for joining in. Is this a big kicker for crude, or has that kicker already played its part in Brent moving up to $62 or $63 per barrel?
Good morning. Look, it is quite interesting to actually see 1.2 million barrels, in my mind, isn't a large kicker at all. And I think the market has thus respected that. In fact, we've only had that bounce. A lot of us would have considered a little bit more, would have seen more. But seeing it's only 1.2, I think it is actually just a start. Although I do know the market is short, so we might see just a little bit more on the top side.
Okay. There are experts that I read had spoken or given interaction to Bloomberg Global, mentioning that it seems unlikely that Brent might go all the way to 70 or NYMEX all the way to 60 because of the decision that has been taken. Would you second that opinion?
Yes, I would. I think the fact that there is decisions that have been made means there's room for more decisions. OPEC Plus have come out and obviously said, well, they're concerned about prices going lower. I think if anything, when you see them, everyone working together, they could do more. What does concern me at the moment is not just what's happening in OPEC, but also what started to happen in Canada in terms of their supply cuts. So there could be sustainable movement over the next couple of months in the price of crude as a result of the first cuts by OPEC.
Okay, Jonathan, we'll leave it at that. Thanks much for taking the time out this early in the morning and talking to us. Appreciate your time.
Thank you.
Well, technically, Sydney a few hours ahead of us as well. But I think the consensus seems to be that Brent will not find its way all the way back to $70 per barrel. So, which is not probably bad news. In today's session, though, because of the uptick, let's see if there's a pause in the money markets, rupee, as well as what could happen to the oil marketing companies. The last piece on First Word today is a Bloomberg Quint exclusive. Subhash Chandra and his family are looking for a strategic partner in Z Entertainment to transform the company into a global media tech player, or so they claim. A detailed study of SL Group's balance sheet shows that it may just be the only way to deleverage the parent group as well. Sajid Mangat, who worked closely with Aman Kapadia, joins us now to take us through the details of this story. Sajid, very interesting. What does that research and analysis tell us?
We've been working on this story, and Aman has been working on this story for only a week, trying to figure out how big is the SL Group, because one thing which we struck out very clearly was the promoters were wanting to sell half the stake. It was not a fresh equity infusion, and that led us to see what it is, what is the reason behind it. Of course, the official reason which has been given, and it makes strategic sense as well to get a tech giant into the company so that it transforms into a media tech company. But it is also the fact that the SL Group has expanded over the last few years into various infrastructure sectors where there is, and now they're facing some kind of stress there, and that's the reason why you've seen the pledged shares going up over the last 4 to 5 quarters. And Puneet Goenka has been on record not only with analysts but also with Bloomberg Quint saying that they have now crossed a comfortable level and they plan to bring down the pledged shares over the next 1 or 2 quarters. So that's how we started off looking at what is SL Group. Now SL Group is a huge group. It has nearly 130 companies odd, 15 investment companies which have taken loan worth nearly 7,500 odd crores, 7,600 crores, and nearly 88 operating companies that have additional loan of over 9,000 crores crores. So our total debt of that group is around 17,000 crores odd as of March 2017. We don't have the latest figures as of March 2018, so we don't know what the exact debt figure is. But what is important to see is that these 15 investment companies have a revenue of nearly 660 crores odd and a loss of nearly 800 crores, and the investment company on the operating companies, which are 87 of them, has a asset size of nearly 16,000 crores. So they are huge in the infrastructure space. They are into roads, transmission, solar energy, urban infrastructure like waste management and other. So there are multiple entities which are working in them, roads being the bigger one, and roads is one of the sectors where they're seeing some stress, which even Care Rating has said in its report, saying that there is some asset liquidity mismatch which is coming in as a result of the stress which is there in roads, because many of the road assets are still not operational. They are still in the development stage, and they're not, and so they're not generating revenues there. And these 87 operating companies have nearly 1,600 crores in revenue and loss of nearly 400 crores odd. So it's a group where there is a large exposure to infrastructure. The cash cows are the media companies led by Z. And there is a severe need for deleveraging which is happening, and their group is doing that. They have sold the transmission business for an EV of enterprise value of nearly 6,000 odd crores. Now that hasn't closed yet, but it's expected to close in the next couple of quarters. They are also trying to sell the solar business off to bring down the leverage there. So there is a multiple activities which is happening to deleverage the group, and Z stakes in Z, where the promoters will get 9,000 odd crores because it's a second market transaction which is going to happen, will also help in deleveraging. Of course, Z has very categorically denied the linkages between deleveraging of the group and the stake sale here. The entire effort is to bring in a media a technology partner which makes the company media tech and takes the group forward in its future. But the numbers doesn't give that story out. The numbers gives a different story, saying that there is a stress which is there in the group.
And both could be complementary to each other as well. There could be stress. They might also be wanting to do both.
So it's it could be an alignment of both, where it's a win-win. They're able to reduce it and at the same time achieve what something Z is trying to.
But the numbers are staggering.
Numbers are staggering because this is 130. It doesn't have one group company which has all details, right? It's 130 odd companies. You need to bring in all the numbers to see how big this company is, and even credit rating agencies take only company by company. They don't even look at the group level.
True.
So,
well, and this is a very interesting story. I must urge all our viewers to log onto the website, search for Subhash Chandra if you don't get it otherwise, and the story is there on the website. So do go out and read this story. Sajid, fabulous work, both you and Aman. Thanks for putting this into perspective as well. Well, that's all that we have on First Word for the day today. Frankly, a lot of you would be wanting to know now that after this macro stories are done, what about trade? That's what we'll discuss on the other side of this very quick break. We also try and discuss what the markets would be reading from the exit polls with Saurabh Mukherjea of Marcellus Investment Managers, and if it's really advantage Congress in this round of state elections with political analyst Krishna Prasad. After this break, a full tilt towards the day's trade.
RP Sanjeev Goenka Group, growing legacies.
It's not about the award. It never is. It's about what went before and what came after.
It's about getting recognized for the trust and confidence the customer has shown on us. We actually strive for it.
It's about the brightest ideas and cleverest implementations. It's about innovation.
It's about impact for manufacturers and help for shoppers. Tangible, meaningful impact for manufacturers who innovate and genuine help for shoppers looking for the best new things on the shelves.
It's not about the award. It is about standing out. It's It's about being a giant even if you're really, really small. It's about picking the leaders of tomorrow, today. It's not about the award. It's about competing.
It's about an unbiased, countrywide, face-to-face consumer survey that is unique and provides relevance and differentiation. Essentially, we're adding something to the marketing arsenal of product teams.
It's about doing one's best and raising the bar each time.
So it's about the end customer. If you have that clarity, what is this need that you're trying to solve for the end customer?
About exceeding expectations. About going all in. Coming. Product of the Year.
It's about feeling good that we are associated with Product of the Year. This is our 10th year.
30 years of finding brands that capture $1 billion.
Hello and welcome. You're watching Indian Open right here on Bloomberg Quint. It's a sea of red across Asia. You've been seeing heavy cuts coming in across the board for Nikkei 225, which is down about 2.25%. Shanghai is trading under by almost 1%, and the Hanxiang gives up 1.7% in trade. And this follows the trading activity across US, which had a plunge in the last week's trade. SGX Nifty just about holding fort around the 10,600 mark, but down a heavy 1.3%, which is indicative of a bigger gap down open as we open up for trade this morning at 9:15 a.m. for the Nifty as well. Pretty guarded on Friday session, in fact a good pullback, but whether or not that translated into an accumulation of longs on the index, let's go across to Darshan Mehta to find out. Good morning, Darshan.
Good morning, and it did, Devina, given the fact that only the Nifty outperformed, the Bank Nifty even did better, and that was only on account of a few stocks that managed to move up. The SGX Nifty is indicating that probably we will open below the 10,600 mark in trade, so all the fresh longs that were taken could actually get unwound in trade today. So on Friday, we were up almost close to 1% on the Nifty, given the fact that Kotak Mahindra Bank as well as Reliance, Infosys, ICICI Bank managed to move. The Nifty Bank was up almost 1.5% on very high open interest build-up, given the fact that Kotak and ICICI have large weightages on the Nifty Bank, and that managed to move up significantly. Now, where are positions being taken? We ended above the 10,700 mark in trade. Right now, the SGX Nifty is indicating that we will open somewhere close here. So what we are seeing is that put writers are active from 10,800 to lower levels, and call writers from 10,700 to high levels, with the Nifty opening somewhere around the 10,600 mark in trade. The 10,600, 10,700 and 10,800 put writers will be forced to shed positions in open interest, given the fact that their premiums will go up significantly, and call writers, because of premiums falling, will make significant amount of money. So call writers will actually start writing. So let's see what happened on Friday, and exactly the reverse will happen today. So what will happen is that these red lines will start going down and the green lines will start coming up. So that's the trend that probably we will see in trade today. No stocks in the F&O ban as of now, but the PCR came up significantly for the Nifty, and since the Bank Nifty, because of Kotak and ICICI Bank moving significantly, the Nifty Bank PCR moved up to 1.26 from below 1 level. Stocks that you need to watch out for, these are the counters which saw high open interest build-up. Muthoot Finance saw open interest build-up of almost 50%. Fresh longs were seen. Results analyzed with finer detail, and they turned out to be good results, and it was up almost 12%. HCL Tech broke below the key 200-day DMA on Friday. We'll need to see whether it moves down or no. Kotak Mahindra Bank came off from the day's high, but it seems to now there's still no clarity on whether there will be any kind of M&A action. So these are the stocks that you need to watch out in, which saw high open interest build-up. In terms of stocks which saw either short covering or long unwinding, except for Tata Power, which saw long unwinding that came in, all the other stocks saw short covering in their respective futures.
Right, Darshan. Thanks very much for that. Let's bring in Avinash Gorakshakar now joining in to talk about the markets and more. Obviously, Avinash, good morning to you. It's going to be an extremely volatile week, especially the focus is going to remain on the election outcome for the 5 states and what happens thereof. But what are you expecting from the market standpoint, and whether or not it's going to be more of capital protection now that's going to take precedence?
My guess is I think the markets have already factored in a defeat for BJP in the Rajasthan state. I think clearly if the verdict, Devina, is 2:1, I would believe the markets would definitely be happy. I think in case it's a loss of 2 states, then I think definitely the markets would take it as a kind of a big demoralizer for the markets. I think broadly, elections are now going to at least make the market sentimentally weak for some few days. But overall, I think all said and done, I think this is going to be a very important state election, considering the fact that both MP and Chhattisgarh are very important. And in case the BJP loses here, we could see a minor sell-off. I think then levels of even 10,500 or maybe 10,400 could possibly be met very soon. But overall, I think clearly from a near-term perspective, I think it's going to be only the election verdict. From a longer-term perspective, elections may come and go. I think it's going to be earnings which would definitely matter at some point of time. But overall, now the mood clearly is on the state elections.
Let's talk about specific stocks then, and since you mentioned earnings, one stock that has been on a tear since its numbers has been Muthoot Finance, and Friday session also a good 13-14% increment. Is it likely to carry forward?
See, I think one interesting aspect about the numbers, Devina, was the asset quality. I think asset quality has become quite healthy, and I think the management reiterated on the con call that these numbers could possibly stabilize or get better as we go forward. I would believe that gold finance, unlike pure NBFC companies, are definitely a much better bet, considering the fact that they have a reasonable, stronger asset with them. And I think looking at the kind of yields they earn, I would not be surprised that, typically, I think what growth we have seen now possibly could get better in the coming quarter. So I think definitely somebody who's looking at adding it as a portfolio pick could definitely look at buying it on a decline, because 12-13% jump is quite significant. But definitely, I think the business seems to be shaping up quite well.
The market mood will be somber today, Avinash. Crude prices also have gone up. How big a bearing could that have on the trading sentiment on, say, an Asian Paints or an HPCL or maybe an aviation stock?
I think Neeraj, today, unless and until we don't see some clarity on the election front, I think crude definitely, I think, all said and done, obviously rising crude prices are not good news for paint companies or tire companies. But my sense is, I think, looking at the kind of news flow the OPEC meeting threw up, I would not be surprised that, oil prices could possibly stabilize here. I think there's no panic as such that prices could go up. I think possibly how the currency behaves is now going to be critical. Hopefully, if the currency stabilizes, we could see some sort of sanity in the markets. But at least till the time we don't get a clear indication as to what throws up in the state elections, this market, at least for the first half, is going to be extremely volatile.
Okay. Let's wait and watch what happens there. I must tell you, though, that even tomorrow, because of the close nature of the predictions on the exit polls, we might not get a fair idea even till 10:30, 11. The exact idea might well come in very close to 12, and therefore it might be prudent to just hold on to your horses before taking a large bet on the trading side, depending on the exit poll outcome today and to the state level outcomes tomorrow as well. But we'll talk about that a bit later on with our technical experts too, about whether this is a prudent time to cover any kind of long positions that you may have or otherwise. Let's first get in our research team members to talk about the stocks in news today. There are some which could react, some brokerage notes as well that have come out. So Nikki, Yash, as well as Somit here with all of those. All three of you, good morning. Thanks for joining in. Nikki, let's start with the stocks in news first.
I'm going to start off with Ashoka Buildcon, which is bagged an order around 790 odd crore from Rail Vikas Nigam, which is the project is in connection with the 3-laning of roads, which is divided into 2 packages. Tata Sponge, where the government has given an environmental clearance to the company for increasing the production capacity of its DRI plan by around 40,000 TPA. Suzlon, again, is expected to be in focus because the company is in talks to offload around 49% stake in service unit. This is an ET exclusive that we're tracking this morning. IOCL, that's one counter that we should keep an eye out on. The company is going to be considering buyback and dividend on December 13. IFCI, on back of the earnings reported by the company, where the company has reported a net interest expense of 16 crore as compared to the income that we saw in the corresponding quarter. The net loss seems to have narrowed to 17 crore as compared to a figure of 294 crore. mainly on account of other income which has been reported by the company, and Texmeco Rail and Engineering, where Equity Intelligence has sold in more than 9 crore stake in the company. It's sold in more than 17 lakh shares worth around 9 crore stake in the company. This combined with another bunch of stocks tranche has been sold out for a sum of around 5 odd crore.
Okay, watch out for some of these. Let's talk about some detailed analysis of some analyst meets that happened as well, and Greenply, I believe. Let's detail it out for our viewers here.
Right. So the management commentary was actually quite bullish, Neeraj, and they maintain their optimistic guidance as far as the plywood business is concerned, driven by the increased capacity expansion. Now, on back of that, they have increased their guidance for the plywood business from 1150 crore rupees to 1800 crore rupees by FY21. However, the MDF business, that continues to remain under pressure, and that is on account of the overcapacity in the industry, which they believe would put pressure on the margins as well. And with the entry of the unorganized players in the space, that could trigger a potential price war. Higher share of exports, that could likely offset the weakness in demand in the domestic business. But all in all, they continue to remain very positive as far as the plywood business is concerned. MDF, not so much.
Okay. What about other brokerage notes?
Well, a couple of them. First is on Suzlon Energy, where HSBC has maintained the buy rating but have cut down the target price on Suzlon to 9.5 rupees from 14 rupees. Now, according to the brokerage, Indian wind power industry's recovery post the transition from feed-in tariff to auction-based tariff has been slower and shallower than expected. Now, because of this, the Suzlon and the industry has seen a weak volume growth. Now, because of this lower volume growth, the brokerage has cut down its EBITDA estimates, thereby leading a cut in its earnings and target price going forward. Lastly, according to the brokerage, the company has been trying to address the slower execution issue, and the current order book of the company gives a revenue visibility of close to around 2 years, says the brokerage. The second we have is Axis Capital on RBL Bank. Now, the brokerage has maintained its buy rating but has hiked the target price on RBL Bank to 660 from 575. Now, the management meet has confirmed the brokerage on its long-term outlook and belief in execution capability of the bank. Now, according to the brokerage, RBL Bank is significantly investing in future and has the capability to outperform the big bank leagues going forward. Now, it is expecting the bank to scale up materially on the back of its increased share of high-yielding unsecured business, granular and diversified loan book, pan-India presence, and the room for higher operating leverage going forward.
Okay, thanks a lot for that, Sumit. So, some stocks in news as well to monitor, some brokerage notes. Avinash, 2 or 3 that stood out for me. Any one that you track? The bullish sentiment of Axis on RBL, or this probe by MERC into Adani for the high electricity bills in Mumbai, or maybe ethanol blending likely to go up to 8% in petrol? Which one do you track the most?
No, I think, Neeraj, we like RBL Bank and have been recommending this stock to our clients also. Our sense is that, very strong loan book growth and a disbursement growth and a very solid kind of asset quality profile. I would not be surprised that within the private sector bank pack, this is one stock which can do exceedingly well over the next, say, couple of years. In fact, valuations have been slightly pricey, but I think if you look at the management quality and the commentary, and most importantly, the delivery of the numbers over the last 3 to 4 quarters, I would believe that investors should use this opportunity to buy the stock on every decline. In fact, even at the current odd levels, I would believe that somebody has a long-term view on the private banking pack, then I think RBL definitely should definitely do well. So I think within the given choice, I think this definitely suits a good long-term investor where the risk reward definitely looks pretty good.
Let's talk about a few other names. Kotak Mahindra Bank. When we took a look at the movement in the stock, post obviously the news that some media houses suggested the interest of Berkshire Hathaway. Nonetheless, on the operational front, on the valuation front, I mean, now that the stock has come to levels of about 1300 odd, would that make a case for investment?
Devina, I think looking at the kind of diversified nature of the business, I would believe that at least not in the short term, but in the longer term, the business is well diversified and the balance sheet also looks pretty strong. In terms of the asset quality and in terms of the loan book profile, I think this is one of those banks which obviously has very little kind of assets on the ILFS entity, and most importantly in terms of the capital market piece, they have done pretty well. So I would believe that yes, somebody who's looking at a well-diversified bank with a a good traction for growth as well as good amount of risk management, this definitely suits the bill.
Anything on a Yes Bank or some of the other private banks?
I would believe Yes Bank definitely, clearly I think till the time we don't see a new CEO or possibly some sort of clarity on the asset quality numbers, Devina, I think clearly the third and the fourth quarter are going to be extremely important because not only markets but several analysts are looking at a higher asset quality elevated number. So I think it's better to wait and watch here. And I think within the private sector bank, something like a Federal Bank looks pretty attractive. If one were to look at the longer term picture, they have a decent CASA. Good kind of deposit base, especially the NRI deposit base. I would believe that these levels are pretty attractive if one takes a longer term kind of picture.
Oh, let's wait and watch what happens. Avinash, stay on, so much more to talk about. Very interesting to see, Devina, what happens if indeed whatever quantum of select long positions that people may have on index or specific large caps, whether they get unwound today on open when we start off about 1.5% lower.
Yeah, most analysts are talking about the precedence to capital protection because it's going to be definitely a volatile week. So if you're getting exit points right now, you may land up getting entry points later on, but you need to protect your capital because it's going to be extremely volatile.
Yeah, I think that's a really important point. Maybe preservation and protection of capital in the current scenario, wherein both global and local uncertainties are right at the peak. Well, let's try and figure out how our experts are suggesting people do that. Brijesh Bhatia, head of research at Dealmoney Securities, joins us right now on the show. In a bit, Ruchit Jain of Angel Broking will be with us as well. Brijesh, good having you. Thanks much for joining in. What would your advice be to somebody who's looking at the ticker sub 10,600 today? For any kind of positions that may be existing, long or short, what should one do?
I think we have already seen good momentum, and I think being exit polls slightly favoring not favoring in the BJP courts, and I think Nifty might consolidate slightly, and I think 10,500 would play a strong support zone. So I think till that level is not breached, I would not continue with the bearish momentum on the downside, and I think that level would slightly be watched further today, 10,513 to 10,550 zone, which previously also acted as a strong support zone, and in the Friday session also we have seen slight writing coming in 10,500 put. So I think that would act as a strong support, and maybe in case there is a dip and market consolidating till first half of the day between 10,500 and 10,550, one would take call options to minimize its risk and look for again 10,650, 10,700 level on the upside. But I am will wait 10,500 to breach to take a bearish momentum, or I would take reverse positions at around 10,550 or 540 zone if market is holding that in the first half of the day.
Okay. Ruchit Jain also joins in. He's a technical analyst at Angel Broking. Ruchit, good morning to you. While we are going to see a big gap down open on the index, will it be too soon to take a positional call, or would you avoid right now and go for specific stocks instead?
Yeah, hi, very good morning, everyone. Certainly, one thing is sure that we are going to see a lot of volatility because of the events that have been lined up in this week. Now, if I only look at the technicals, then on the chart structure, we have already retraced 50% of the entire correction that we had seen in the month of September and October. Now, during last week, there were two gap down openings, and post that gap down openings, a follow-up sell-off was also seen, except on Friday's trading session where some pullback was seen. So this entire last 2 weeks which had panned out, a strong support has been seen in around 10,489, which was the low registered on 26th of November. So for me, 10,489 remains a crucial point which would decide the trend for the market going ahead. If we breach 10,489, irrespective of the outcome of whatever events are there, if 10,489 is breached, then only we would again resume the correction that we had seen in the month of September and October, and that breach of 10,489 would then lead to a very sharp correction, maybe towards 10,000 levels as well. So at current levels, we are advising our clients to just wait and watch for this level of 10,489. If one has to take a fresh position in the Nifty, then go short only when this support level is breached. Otherwise, focus more on stock-specific strategies and avoid trading in the index.
So let's run through your stock-specific strategies then, Ruchit. You've got a sell call on Tata Global and you're selling BEL as well.
As we see in the broader market, specifically in the mid-cap segment, the momentum is more on the bearish side. In fact, if I just see the Nifty mid-cap index, then during entire month of November, a pullback move in the markets was seen, in large-cap stocks was seen, but the mid-cap index had just consolidated and has again resumed the downward momentum during last week. So that is why both the picks are from the mid-cap segment itself. Both are sell call and both are based on one of the strategy that we have to sell the underperformers. So both have been underperformance in last 1.5 months of pullback. So Tata Global is a sell because of this underperformance. The low top, low bottom structure is still getting continued. So one can go short with stop about 210, expecting target around 197. And BEL, this has been an underperformance since last 7-8 months, not only last 1 month. We had continuously seen that every pullback rallies have been sold into. So even BEL, one can go short at current levels, keeping stop about 82.60, expecting target around 74.
Okay. And Brijesh, what about your specific stock recommendations?
Yeah, even I had a sell call on Tata Global. So if you look at the Friday session, we have seen stock breaking down of the descending triangle formation, and the bearish momentum is continuing. Again, the lower high, lower bottom clearly indicates that stock is into the downtrend, and with the momentum, I think one should go with the momentum in the future short. So I think I'm expecting a target of around 193 on the Tata Global, and one can place a stop loss of around 212 on the future. Second stock is BAIL. So if you look at the BAIL, it is resisting around 70 zone, 71 zone, and moving back towards on the downside. So I'm expecting a short call on BAIL at around 66.20, and one can look at target of around 60.50 on the downside, and the stop loss would be placed at around 69. So 69, because if you look at the multiple highs, the 68.5 was the multiple resistance zone for stocks, and I'm just keeping the stop loss higher about the resistance zone. So both short calls on Tata Global and BAIL could be the pick of the day.
All right. Just stay on with us, gentlemen. We'll come back and talk lots more stocks, but on to our special segment, that's Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock, or a trend that he's picking up. Yash, what's on the radar today?
Morning, Devina. So the stock that we are tracking today is actually Chambal Fertilizers, and a sell call coming in based on the fear and greed indicator, which is the proprietary Bloomberg indicator. Let's first try and understand what it is. It basically calculates the spread between the weighted averages of the true range, the two weighted moving averages of true range, and it oscillates on a zero basis line. How do you interpret it? You go long when the indicator turns green from red, and you sell when the indicator turns red from green, which is the case when it comes to Chambal Fertilizers. Now, over the last 4 trading sessions, it has been in a bit of a downward pressure, falling in each of those last 4 trading sessions, and with that of the move of Friday, the indicator has turned red. So if you could see the green bar, that has turned negative, so a downtake of a red bar coming in over here. Also, an interesting point is that very close to where the stock ended at 146 levels, that is where the 50-day moving average is as well. So about 145.5 is where the 50-day moving average is also. So should it manage to break below those levels, it could indicate further pressure on the downside, at least in the short term.
Okay, and how accurate is this?
So 5 out of the last 9 times that the indicator has turned negative, it would have given you on an average returns of close to 6% over the next 10 trading sessions.
Well, let's wait and watch. The market trend may be in the favor of this as well. Yash, thanks for putting that into perspective. So that's Chambal Fertilizers. Do watch out for that one as well. The fear and greed indicator suggesting a sell call on this stock. A lot of, the question mark may be in the minds of people who've trading or are long on companies that did well in the session on Friday, and what the market pulled back today and maybe over the next few days could do, because frankly, it's not just about the local markets, isn't it, Devina? The global markets aren't looking all that positive. With the US markets doing what they are doing, the Chinese growth numbers have not been positive at all. It's been steep contraction in their growth numbers too. So primarily because of the global markets, is that a bigger worry too? Because these elections outcome would be a day or two, short-lived. What happens over the course with the US markets doing what they're doing and the Chinese markets what they're doing is the overhang remains, and that might be a bigger worry.
And currently, while we've been talking about dovish Fed commentary and a few things, with the US earnings just a month ago, where it looked like things were getting back into shape. It seems like now with the kind of correction, more technical barriers are also getting breached on the downside. And you've got other things like people would have anticipated a steeper rise in the price of crude oil, but that didn't happen too.
Which is probably a bit of a respite though.
Yeah.
But the global factor is certainly playing a bit of a sport out here. What do you do with names in which you are long? And I'll come for the fundamental piece as well with Avinash. But just quickly, Ruchit, Kotak Bank, we didn't get a chance to discuss that. A big uptick, a lot of people would be long. What do they do this morning?
I think one of the best strategy that not only in Kotak Bank but across the board is to book profits on the long positions if you are getting a good amount of money, because the momentum for the broader markets, if you see, is on the negative side, and in case the market resumes its uptrend going ahead, then I think one can again look to re-enter those names which are showing outperformance now. But as of now, the most safest strategy is to book profits on the existing long positions and wait for wait for some market momentum to again continue on the higher side.
What about the losers, Avinash? HCL Tech, big drop, 5% lower. People questioning whether this will be a lucrative deal on a ROI basis as well. With the market looking weak, what would you do here? Because it's a cheap stock.
Yeah, it's a cheap stock, Neeraj, but this acquisition has thrown a little amount of doubts in the mind of investors, and I think the overall kind of reception for this acquisition is that until and unless the market sees some sort of good amount of earnings coming out from this acquisition, until then I think the street would definitely be a little cautious. I would believe that typically I think this acquisition could possibly throw some sort of earnings visibility only after a couple of quarters. So till that time I think the stock could remain a little range bound, and I think until the management actually highlights what kind of numbers this acquisition actually brings on the table, the stock may remain a little range bound. I don't think you could see a good amount of re-rating happening, at least in the near term.
Probably we have to wait for mid of FY19 once this deal actually goes through to see whether or not anything meaningful comes out of it. But historically, HCL Tech has had to sweat it out with any sort of a deal with IBM. So that also weighs in. HCL Tech, 961 on the stock right now. Within the IT pack, and Brijesh will come to you with this one, while we were looking at some amount of excitement in the last month or so for some of these names, would you say that being a little bit more defensive right now is the way to go? And not just IT for that matter. If you take a look at IT or FMCG, that's the place to put your money?
Yeah, I think definitely yes. If you look at the IT space, TCS and Infosys have already corrected and shown a sharp recovery. Even if you last discussed, the IT is forming, IT index is forming a slightly bottoming formation, and correction is, I think, done for the IT space. Best bet, I think one should go long on Infosys and TCS would be the strong bets in IT space especially. And even if you look at the HCL Tech post news, it is being strongly holding 2.5 years of rising trend line, which is placed as around 920. I think till 900 is not breached, HCL Tech also won't be in the bearish formation. And this dip should be an opportunity to accumulate all the IT space. Even if you look at the Infosys, even if you look at the Wipro as well, we have seen stock getting 52 and slightly correcting with the momentum. But yes, that could be again a good buy, keeping in mind if your horizon is of from 3 to 6 months. Yes, IT space would be a good buy.
Let's talk a little bit more about mid-cap IT too, which has seen a bit of an, a down dip period in the last 1 week or so. Stocks like Mphasis, Hexaware, NIIT Tech, all of these names. What would you do in counters like this, Ruchit?
So within the IT space, if we do a relative strength comparison of the large cap and the mid cap stocks, then definitely last 6-7 months the mid cap has shown somewhat of underperformance, and even in the last 2 weeks where we had seen some pullback moves in names such as Infosys or TCS, the mid cap names have not performed well. So this clearly shows that within the IT space also, if this sector continues to remain a defensive or a pullback move would be seen, then the large cap stocks would show some outperformance, and there is more safety in the large cap as of now rather than mid cap names. So I would advise to avoid trading or hiding into the mid cap IT names. Rather, Infosys and TCS, which you just spoke about, I think those are better stocks to park your money right now.
Okay, so stick with the large names instead of the mid-cap names, which is still looking a bit more fragile. 30 seconds to go for market pre-open. It is most likely going to be a gap-down open on the back of indicators from SGX Nifty, which is just about holding on to that 10,600 level. From Asia, as a back weakness persists and in fact just worsens a bit for Shanghai, which is now down a whole percent, 2.25% under for Nikkei, as well as Hanxiang, which is trading under by almost 2%. 1.27% given up for the SGX Nifty 10,603, and that's our market pre-open view. A 1% gap down open on the Nifty, breaking down below that 10,600 mark. Sensex, though slightly more divergent, but will come to stabilize in just a few moments. Amongst individual stocks, Indiabulls Housing is seeing a 10% cut, Adani Ports is seeing a 10% cut, Hindalco seeing a 10% cut. So all these names, heavy cuts there, but we'll wait for a few moments for them to cool off as well. Wipro is down 5.5%, Bajaj Finserv, UPL, Asian Paints, Yes Bank are the ones that are losing closer to 2.5% apiece. Reliance Industries down 1.75% as well. The entire oil marketing basket as well should be in focus with what's been happening with crude oil. Amongst the gainers, you have a handful of 5 gainers this morning at pre-open, M&M being one of them, up 1.2%, ONGC, NTPC, GAIL and Bharti Infratel are few gainers. The currency, and that has weakened way faster this morning, so almost 1% given up on the currency. We're at 71.39 from 70.8 that we shut shop at on Friday's session. So this is going to be a little bit of a concern, which is also going to have a double bearing on the equity market sentiment.
You bet, and the bond yields too should have hardened a little bit. I think most money markets experts predicted, okay, the bond yields haven't, but most money market experts predicted that the bond rally will pause a bit and the currency would weaken. This has got a lot to do with crude prices as well. Don't just blame everything on exit polls. But yeah, 7.4640 for the bond yields and about 71.39, if I'm not wrong, 38 for the rupee as well. So that's had a swift pullback as well. We're cheering about 69.70 just a couple of weeks ago, and all of that seems like distant memory currently. So looking wobbly right now. Just a few mid caps that I want to highlight, 2 or 3 before we take it back to our experts and try and figure out what to do in a scenario like this, because we are looking at 10,544 for the Nifty on pre-open. An unnatural 19% downtick in Shoppers Stop. Let's wait and watch. Watch out for the names which had a big rally off late. The Adani Group seems to be right out there. High beta stock, fairly volatile, all of them, except Adani Ports maybe. Adani Power, Adani Enterprises, Adani Transmission could be an interesting one as well. MERC said that bills would be reopened for the Mumbai electrical region, and they may have to pay refunds if indeed there is any kind of violation found. Watch out for these 3 names. Sugar seems like it'll start off okay. Bajaj Hindustan at least is showing some uptake. I don't know about Balrampur Chini. No, not quite. So maybe Bajaj Hindustan is showing a freak trade. That might change. But do watch out for some of the sugar names. Could be interesting ones because of the ethanol blending or blending being taken to 8% comments from the minister. But aside that, frankly, not too many stocks to watch out for. I mean, most of them could have a slightly wobbly start in the session today. A lot of people tune in right now, Brijesh, and would want to know what to do after this fall. So it's okay to say that we'll start off lower. That is known. At 10,522 or 10,500, assuming that we start off that much lower, what would you do then to either an existing position or a new position on the index?
I think 10,500 is crucial for me, and even if in case that breaches 10,500 490 zone in the morning session, one can look for buying put options of 10,400, maybe 300 put option, minimizing their risk. Or even if you want to look for a future shorts, that stop loss would be slightly higher at around 10,580. So in case you can, one can manage 80-90 points of stop loss, because volatility will increase in the morning session as well. So if in case you can manage 80-90 point stop loss, can short futures below 10,500 or 490. Or in case you can go via options buying 10,400 put or 10,300 put. But 10,500 will be a crucial, 10,490, 500 will be a crucial levels to watch for the day.
Where do you place the base for the Nifty, at least in the near term right now, looking at where most of the options accumulation is happening? Brijesh?
I think in case 10,490, 500 is breached, then we might have a resumption of fresh momentum, bearish momentum towards 10,180, 10,100 levels. So I think if that level is breached, one should remain bearish on the markets, and till 10,500 market is holding, I think all possibility of rebounding towards 10,750, 800 levels.
Okay, gentlemen, just stay on. Yogesh Mehta, Vice President of Research and Sales at Motilal Oswal Securities, is joining us on the show right now. Yogesh, good morning to you. The pre-open, we're down about 1.6%, almost approaching the 10,500 mark on the Nifty. But, you know, like we were talking about earlier on, while you will see initial volatility for a short term because of elections, the more deeper aspect to watch out for is what's happening globally and the impact over the next few months to come. So how would you position, how would you expect clients to position, whether to sit out, hold on to cash, whether to deploy using this as an opportunity?
Yeah, good morning. Since markets are awaiting for exit polls, and now we believe that the chances were very less in getting the clear majority, what we believe is that it would be a cautious note here, and on especially for the traders client and investors. We are not recommending too much of a things. They are still sitting on 40-45% of a cash, or maybe 50% of a cash. Traders, we are on a cautious note because market has already discounted all these exit polls, and all the negatives are there post positives of crude oil coming back from 85 to 60 odd. And then again post $1.2 million barrel per day cut. So there is an inch up of crude, and rupee is also depreciating further now. So it seems that on a holistic picture, it seems that temporarily it will be a whole lot of negatives surrounded in the economy on the broader side, but not on the macro side. So that boils down to that it may be again a negative flow for FIs as well, because select few large cap heavyweights are weighing on the street, and indices are holding on to the onto the gains. So overall, our stance is that remain sit on cash, and rather buy puts if you want to hedge your positions, and rather than going more on the long side.
What is the top stock call in the morning meeting today, Yogesh?
For the top stocks, it would be again UPL is a buy, and
there's a buy discussed today.
Yeah,
interesting.
Why
so?
Buy. Because of the development which has happened over the new the agri side, and the global scenario looks little better on the new products pipeline. That has driven some positivity for the stock, and we don't foresee further post the results. We don't foresee that further downside is there for in terms of revenue and the profitability. So needs to watch out for Q3 and Q4 numbers. So there we believe that upside is there and downside is limited for the stock. So traders can take position with a 1.5 month perspective due to results. So that is one. Bajaj Auto, which is again we discussed on the long side rather than on the short, that on a fundamental note. That also looks a little better than the passenger vehicle or the commercial vehicles.
You know, Kotak Bank, Avinash, starting off or looking like starting off 2.5% lower as well. So the sentiment on the market weighing in on the stronger hands as well. But you know, Ruchit, I want to come in on the crude sensitives, and all of them look like starting off lower today. Again, the question is not what can be done to the existing positions, but after this fall that we've seen, say HPCL at 216 odd, or an Interglobe Aviation which is looking to start off 5.5% lower, can you go ahead and trade any of these after this fall on open?
So, you know, I won't take any long position in spite of
that's out of the question, Ruchit. I'm talking about the short positions.
Yeah, definitely. I think if we see the OMC specifically, then OMC's last 2 weeks have traded in a narrow range. And once we get a breakdown from this narrow range, then some short portions could be created. And if I have to choose any stock where more volatility or more downside could be seen, then that would be BPCL. Because last 3 weeks, the continuously, in spite of the whatever momentum that we have seen in the crude oil, the stock has traded in the range of 317 to 332. So if 317 is breached, we can see this stock going below 300 as well in very short period of time. So I would tend to look at one stock, that is BPCL, to go on the short side below 317. One can then keep a stop loss about 329 and expect target sub 300 levels.
Not a single stock on the index in the green this morning. So you've got all Nifty 50 stocks trading with cuts at pre-open, with the Nifty itself just about nudging the 10,500 mark, a steep, almost 200-point drop at pre-open. We'll probably see how this shapes up as we hit opening at 9:15, but it's already consolidated 9:08 now, so these prices are pretty in line with what you could see. Indiabulls housing now at 690, Avinash.
Devina, I think within the housing finance space, I would believe that at least for a couple of quarters, you could see a little bit of liquidity pressure for most of the major, companies here. I would sense that, I think clearly within the given scenario, I think large caps like SDFC could be a preferred bet. I think Indiabulls management has already made it clear that they don't have any liquidity issues. But sentimentally, I don't think, you're going to see a stronger disbursement of growth or a, stronger disbursement of loans in the coming 1 or 2 quarters. So I would believe that it has always been a very volatile stock, and given the kind of near-term scenario, I would believe that those who have it can actually hold on, but fresh buying at these levels could be a little more risky.
Stay on. Chairman, minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. Markets in the United States have raised all gains for the year after Friday's fall. On the other hand, oil prices have gained for the second straight day after OPEC and allies deliver production cuts.
Escorts has transferred its existing RT Crane business to its JV company with Japan-based Tadano for 35 crore rupees on a slump sale basis.
Greenply Industries says it continues to see overcapacity in its medium-density fiber boards or MDF business due to price wars. Stock likely to start off 4.5% lower.
Cement prices are back to square one. Channel checks done by Morgan Stanley suggest a reversal in prices in December after a price hike in the previous month.
Axis Capital reiterates its long-term outlook and believes in the execution capability of RBL Bank, hikes the target price to 660 from the earlier 575 rupees.
And government gives environmental clearance to Tata Sponge to increase the production capacity of direct reduced iron plant to 4,65,000 TPA.
Well, I don't know if there's some adverse ruling otherwise that has come in or the sentiment has changed on power, but suddenly the power companies which are looking like shining, and there is a possibility of a favorable ruling coming up as well, have really come off. Adani Power is, Tata Power is about 1.25% lower. Adani Power is at 48.5 or thereabouts, 7.5% lower for that stock. And these are the two that get impacted the most with the states ruling maybe in favor of the price revision or the PP revision. Gujarat has already done that. What if the others do? But
also, Neeraj, the MERC creating a committee fact-finding, for the electricity bills in Bombay and why they're so inflated in some of the cities. So, just sentimental, just some news. So probably I wouldn't know if that could have a bearing on the stock.
Yeah, maybe sentimentally, yes. But Adani Transmission fundamentally would be the company that would get impacted because of that too. And that stock too should be in focus today, down about 3% in the session. Yogesh, quick thought, power companies?
We don't have much coverage on the power companies, and though we have one is Tata Power, but we have a sell rating there. We don't foresee much of a scope for profitability to grow from here, apart from 10-15% growth rate for at least for next year, not visible beyond that. Okay. So we are not so gung-ho about power companies at this point in time, or never had been in any time.
Interesting. Yeah. Well. Just that the rise has been quite spectacular in these names. So how much more unwinding, Brijesh, do you reckon we could see in say for example in Adani Power? It looks like starting off as the top loser on the Nifty 500.
No, I think if you look at the slightly broader picture, it has made multiple resist 45, 47 levels in 2017 and 18. And I think post-breakout, this levels might be retest. And I think 45, 44, 45 zone would be a good buying opportunity for this stock. I would look at maybe from a point of view of 6 to 12 months, not from a trading point of view, but definitely 45 would be a good buying opportunity for me on the Adani Power. So I'm betting that it might again reverse towards 65 to 70 levels on the upside.
All right, Bajaj Finserv now trades with a cut of about 4% on the index. We've got a minute left to go for market opening, so I want to quickly first take top calls from our technical experts, and then if you have time, probably get in a comment. Let's start off with you first, Ruchit, on your top call.
Now, we spoke about the OMCs, and both the OMCs are indicating a gap down opening today. So, BPCL, if breaches this support of 317, then go short on BPCL. Stop loss would be 329, target would be 300.
Brijesh?
Yeah, I would go on short with Tata Global for the target of 193 and Bail for the target of around 60.85 on the futures on the downside.
Okay. Quick comment now on Bajaj Finserv, Brijesh?
I think stock has been slightly lower, slightly outperforming and broken the rising trend line. So purely from a trading point of view, I think 5450, 5400 on the downside can be tested. So one can look for a trading point of view, a short opportunity for the target of around 5450, 5500 on the downside on the stock.
Well, gentlemen, all of you stay on because we'll need as much advice as we can give to our viewers because we are likely to start off with a bit of a slam dunk. 185 odd points on the Nifty if the pre-open rates are to be believed. Over 500 points for the Nifty Bank, and it may break that crucial mark of 26,000 as well if it worsens further. So brace for impact. Let's just see if it becomes worse or do we stabilize at these levels. No surprise here. We're starting off weak, about 1.5, 1.6% for each of the key indices, and the mid caps and the small caps too would have a tick of red across. So no surprises there too. About 2% lower for the mid cap index and 1.4 odd for the large caps. The small cap space will react in a bit. Now 1.9% as well. Bring up the heat map. It's a sea of red. Save for IOC, and which is marginal in nature, we're not even seeing big buying in the tech counters as well. Those two are starting off slightly weak, but the key is the losing pack out here. 2.5, 3% kind of cuts for a lot of stocks, and I don't see too many heavyweights, but for Kotak Bank within the list of the top 10. We don't see an HDFC Bank, HDFC or a Reliance Industries out there. Reliance is right here. Now in the top 10 losers, down about a couple of percentage points. Don't quite see the HDFC twins. Maybe they'll react later on, but there is weakness across the board. Well, actually 1.2%. I don't know if during the course of the day, the markets would want to believe that the exit polls may not give the correct picture, and therefore let's wait for the final outcome to come in before we take a big trade. And if that happens, you don't quite know what happens, because in Friday's session, we did see a bout of short covering ahead of the exit poll verdict. But for now, we're starting off very, very wobbly. Indiabulls Housing, the top loser. Don't quite see a reaction on the oil impacted counters. So HPCL is amongst the top 10, yes. But otherwise, BP and IOC are not quite there amongst the top 10 losers either. So must say, it is a start in line with what the SGX Nifty was indicating, but one would have thought it would have been a bit worse. It's not. The Nifty is still holding on to the 10,530 odd mark, 10,539 at the current point of time, and the Nifty Bank 26,200, so a bit away from those 26,000 odd levels. It's probably not as bad, but this is just the first couple of minutes. Let's see what happens in the next 13 as well. Devina, what are you spotting at the broader end of the spectrum?
Well, for one, the advance decline ratio is, extremely depressing right now. So 1:9 in favor of the declines. But we'll start off with the bigger losers. And on the small cap index as well, I can barely spot any gainers. So mid caps and small caps looking equally weak. Jubilant Life is down 6%. You've got an Indiabulls Ventures, which is down 5.7%. Dilip Bilkon is down 5.5%. Arcom, L&T Financial Holdings, that's down 4%. You've got a Crompton Grease Power down 3.5%. Divan Housing is down 3.5%. Sterlite Tech is down to 39.5. Vakrangi is moved lower. Future Consumers, the other one that is looking slightly more tepid this morning. JSPL, Dish TV, Siemens, Page Industries. Remember, Page Industries this month has given up almost 22%. The stock's down 3% this morning. REC is also under by about 2.5%. So very, the market right now extremely fragile, and most of these stocks probably that you're seeing have already witnessed some amount of weakness, and it seems to be a little more exaggerated this morning because of the setup.
Yep, looking fairly wobbly right now. Adani Transmission falling about 4% as well. And as we discussed, none of the Nifty 50 names are making any big headways. The top gainer is Tech Mahindra, up about 0.5% in trade. Opening thoughts, now that we do have levels. The Nifty Bank, we haven't quite discussed this. Ruchit, Jain, 372 points down for the Nifty Bank, 26,220. Is there a trade here, either on the futures side or on the option side?
So that we have seen a gap down opening, but both in Nifty as well as the Bank Nifty, the supports have not yet been breached. We spoke about 10,489 being a crucial support or the trend deciding level for the Nifty. Similarly, on the Bank Nifty front, 26,000 is the trend deciding level because this is somewhere around the 200-day moving average, which has not been breached since last 2 or 3 weeks now. So 26,000 remains a crucial support. In case if existing long positions are there, my advice would be to hold on with strict stop below 26,000, and only if 26,000 is breached, then longs should be exited and fresh shorts then should be created in Bank Nifty. Or as you spoke about in Nifty levels, 10,489, that should be the one level that traders should watch out for.
Jet Airways is down 4% as well. So in the last 7 days, the tally now for Jet is 15% under. So 264 on the stock. Aviation as a pocket obviously is a stress point, Yogesh. And the fall in crude oil prices and the cut of ATF really didn't work that much in favor for them as one would have expected. Does one completely avoid?
Yes, Devina, I would suggest that it is one should totally avoid this kind of this sector particularly, because you never know what will happen for crude prices. Even though the crude prices are average $75 for the last quarter and that is second quarter, and yet they come out with all the negative, all the losses on the bottom line number. So their ad hoc charge, the ad hoc cost is also very high, which is the ground staff and the lease and all together. So we don't foresee, and we don't have coverage on aviation apart from Indigo. So it is just an individual company, but yet it has given a blip last time, and there is a first ever time loss they have declared. So if such kind of a company can declare a loss, then the rest of the aviation sector cannot survive, it seems. So many ifs and buts are there. So rather, it could be a trader's delight, but not the investor's delight at all.
I mean, the interesting bit, Devina, is that IOC is up about 0.75% in the green, and then the usual suspects, the IT names, are the top 5 gainers. So Tech Mahindra, HCL Tech, TCS, Wipro are amongst the top gainers. So IT is seeing that bit of defensive buying, but IOC marginally in the green.
Let's get in a chart check. Brijesh, you want to come in on IOC?
I think OMCs are slightly on a bearish momentum, and I think one should look and sell opportunity on this space. Again, around 134.35 could be a good selling opportunity again on this slightly higher side. I would look for a short opportunity in IOC. Better is being underperformer in this space. I think it has already broken the range and continuing its bearish momentum. So definitely 34.35 levels could be a good short opportunity for it.
What would you do here, Avinash? With an IOC, there is a tactical trigger at play on the 13th of December.
Yeah, I think Neeraj, if you see the dividend yield, I think it looks very tempting. I think 15% dividend yield. And they have now announced on December 13 that they would be considering a dividend and a buyback. So I think the market should obviously be looking at a fairly aggressive buyback price, and clearly the price at which the stock is trading currently. My sense is most of the negatives seem to have been factored in. I think clearly my sense is we won't be seeing a runaway rise in crude prices, and hopefully the kind of Iran deal which they have done, which gets paid in rupee terms, I think should also help them. So I think overall in the near term the buyback price is going to be the near term trigger, because at a 15% dividend yield, the downside to the stock is fairly well capped on the downside.
Just want to come in, and since you mentioned buybacks, from all the recent buybacks that we've seen, the one that's probably trading in the green is L&T. Obviously, the date is not yet opened for the buyback, but the others like an Emphasis, an Oil India, and name a few others there. They're all in the red. So does one have to look at this as an opportunity that they can make that quick money, because it's really not presenting to be one?
No, I think, Devina, most of the buybacks have actually made short-term money for traders, because typically during the buyback period, stock prices tend to go up. Technically, I think if the buyback is large enough and obviously offers a bigger window of opportunity for growth, I think that probably is a much more bigger trigger for the buyback. But my sense is that in the near term, what we have seen is that most of the investors actually buy before the buyback.
Avinash, the point I think that Devina is making, that it's counterintuitive in that sense, right? Emphasis, the buyback was announced and the price was I think 12.50 or thereabouts when it got announced. And the buyback price was 13.50. The stock during the period of the buyback has come off sub 1,000. So it's not that I think people are making money.
See, I think it's maybe on a case-to-case basis, Neeraj. But overall,
Oil India too. I mean,
yeah, I think overall, I think buybacks have not garnered that kind of price appreciation, at least in the short term. Maybe in the near term, buybacks may not give that kind of bigger, kind of upside, considering the fact that these kind of buybacks obviously give a better scope for the earnings traction to actually grow more strongly. Purely, I think, but wherever the growth momentum is definitely in doubt, or maybe some sort of slowdown expected, I think there the buyback may only offer a temporary kind of upside.
The other one is HEG. Yogesh, do you track this one? I mean,
no, Devina, we don't track.
No, you don't track this one. Let's take a technical view then, if at all there's a trade possible on this one. Ruchit, HEG at 3,913 from 4,400. The stock's coming right back down.
Technically, it's more into a consolidation phase. Since last 2 months, we have seen that the prices have traded in a narrow range of 3,800 to 4,500, and even the volumes front, if you see, then last 1.5 months, the volumes are not being that high on a daily basis, which we usually saw when the prices were going up. So I think it's more of a consolidation phase. Existing long positions they could be held with a stop below 3,500, but nothing for looking at the volumes. There is no trade setup for short-term traders.
In fact, the management in a recent investor presentation has said that there could be a window of opportunity to export graphite electrodes till 2022 because China capacities won't probably be fully up till then.
Yeah, well, but sadly, and despite decent numbers, I think, and some clarifications about a couple of issues as well, the stock's just languishing a little bit in trade. Yogesh, before we thank you, one name from the NBFC space, Bajaj Finance, has been rock solid, correcting a little bit today. Entry opportunities at what levels, if at all?
For NBFC, there are quite ambiguities still there, and liquidity issues are tapering off a little, not much. So that needs to be watched out, and we believe that for the growth for these companies will remain there, but temporary liquidity issue will have a hangover over there. So already stock has retraced back to almost 20-25% from the bottom. We believe that select few names would be there, but not at this point in time. We will say accumulate at the lower level like L&D Finance or the Bajaj Finance name. The growth momentum will remain there for over next 1 year, 1.5 years if you consider. But short term, there are hurdles and speed breakers. So I would suggest that yes, these are the names which can be looked at for gradual accumulation.
Gradual is the key word out here, I guess. Avinash, Yogesh, gentlemen, thank you so much for taking the time out and being with us today. I really appreciate your time. Okay, final thoughts from our technical experts as well. Brijesh, we didn't quite take your index strategy post-open. So you had mentioned at the start that if 10,530 holds, then you would be, you would not take a bearish trade on the Nifty. It's currently at about 10,530 to be precise. What would an index strategy be right now?
I think it has been strongly holding 10,500 levels. So I think one can look for a buy opportunity in 10,600 call, which is currently trading at around 160. Maybe slightly dip, it can dip towards 148 levels, with being a strong support zone to retest. And keep a stop loss strict stop loss of around 125, 130 levels. And I'm expecting back to around 220, 230 levels on the upside on this 10,600 call. So this is the strategy with high risk, but I'm betting that 10,500 will hold on for a moment.
Interesting. Ruchit, final thoughts, at least final question from my end, and that's on Nifty IT or any of the large cap IT names. They are holding out on a day like this today. Do any of them or the index, actually the large 4 names, do they present a trading opportunity?
I think if I look at the Nifty IT index itself, then today's low is around a trendline support for this index. So some outperformance is expected from this index. And as I said earlier also, that if I compare stocks within the sector, then definitely large cap is one space within the IT where some outperformance is there. So TCS is one name. I think if the stock gives a breakout about 2018, then a fresh leg of upside would start for target somewhere around 2150. So look out for large cap names within the IT space itself. TCS, Infosys, they both are looking quite promising at current levels.
All right, just one last stock from my side. And Brijesh, to you with Tata Motors, what should one do now?
I think slightly would avoid this stock. I think 146, 151 zone is a strong support zone. In case stock is holding those levels and showing a sign of rebound, I think that might change and beat a good reversal trade. Being a positional trader or maybe investor, that key level would be watch out, and I think 220, 240 can be expected if those levels hold on the positional side.
Okay, gentlemen, we'll leave it at that. Thank you so much for taking the time out and being with us today and guiding us through the morning session. Important day of trade, the next two, and look forward to having you more often. Thanks much for being here today. Well, holding on, 10.534 for the Nifty for the time being. The last 15 minutes, we've been steady at these levels. Let's wait and watch if the day progresses like that. But the more important conversation coming up now is to what to do in a scenario like this over the medium term, and what do the exit polls indicate? What are the markets reading from the exit polls? Saurabh Mukherjea of Marcellus Investment Managers joins in to speak about that, and then joining in on the conversation later on to talk about whether it's really advantaged Congress in this round of state elections, political analyst Krishna Prasad.
RP Sanjeev Goenka Group, growing legacies.
The final state assembly elections before 2019. 5 states and 3 BJP bastions.
Even if politics isn't front and center for you, this is the one you can't miss.
Will Prime Minister Modi regain momentum after the string of bipolar losses and the disappointment in Karnataka? Will BJP hold its 2014 sweep across Madhya Pradesh, Rajasthan and Chhattisgarh, or stumble?
Will regional leaders let Rahul Gandhi take the lead next year?
Can the party's relentless march into the northeast take down the last frontier of Mizoram?
Will the move to call early elections in Telangana pay off or backfire for Chief Minister Chandrasekhar Rao?
We're going to geek out on all the numbers and monitor each swing.
And find you the tiny shifts which could change fortunes.
Watch us crunch those numbers, sift through all of that data
to tell you why this election is so important.
So do join us on 11th of December, only on Bloomberg Quint.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're still watching Indian Open. Benchmark Indian indices have opened with cuts of more than 1%, reacting to the photo finish predicted at least 3 of the 5 states which went to polls over the last 1 month. Hopefully, all the anxiety will end by tomorrow evening when counting is completed. But it's not just these states that matter, with everyone looking upon these elections as the semi-finals before the big one. And united opposition is now fancying its chances of beating the ruling BJP. And that's put investors on tenterhooks. So what should one do right now? Let's bring in Saurabh Mukherjea of Marcellus Investment Managers to talk about this in greater detail. Saurabh, good morning and great to have you on the show. Obviously, now we're going to be waiting for the final numbers come tomorrow, but the indication of the poll of polls, and how will you read into that in context of the bigger election?
I think if you ask me, today's correction is as much about geopolitics as it is about the exit polls. And I think that point of view, I think, will sustain over the next 4 or 5 months. Whilst there is plenty of political drama at home, my reckoning is the combination of what's happening in China, what's happening vis-a-vis the Huawei CFO, what's happening with the FBI's investigation into Trump and the oil price. I think there's more than enough geopolitical drama which will roil our markets. So yes, the domestic elections are very interesting, but I've long said that I don't believe the Indian political scenario has any fundamental bearing on the Indian economy. It hasn't had in the past, it won't have now. Yes, it will create some market perturbation, some market turbulence, but the overall macro setup is such that if the markets do pull back to, if the Nifty pulls back to 9,500, I do think it presents a buying opportunity. I for one, certainly will be looking out for that. I think the combination of global geopolitical turbulence and domestic political uncertainty, there is a real possibility that the Nifty hits 9,500, at which point I think a buying opportunity presents itself.
Which you told us earlier on.
That's right.
That's an auto trigger for you.
Yeah, I wouldn't overplay the significance of elections from a fundamental economic perspective. I really don't believe there is any. Certainly can't find link between Indian macro and Indian politics over the last 20, 30 years of data.
But just from a sentiment point of view and the volatility point of view,
that's right.
That will rein in if at all the polls convert the actual result.
Absolutely. So the noise around elections, quite literally the noise around elections, could lead to some people selling the Indian market, and if they do so and the market pulls back to Nifty 9,500, I think we should consider.
But I think even global investors are watching closely, right? Because they are also, if BJP doesn't come in.
I'm not, again, I think what will happen is the mixed signals. So see, the US market pulled back 3% on Friday. If that's the extent of pullback in the American market, it is but natural that emerging markets, including India, suffered through this week. But I'm not sure I'll attribute that to political outcomes. I'm not sure there's a massive constituency of FIIs who will sell the Indian market basis the identity of these elections or the general elections. Most people who've done emerging markets for 10, 20 years know that political cycles really have very little impact on as large a macroeconomy as India.
Sort of the investor within you, and the question is to that person, the person who's managing so much of money or advising so much of money, if indeed there is a drubbing for the BJP, would the BJP take it as the rural distress showing its signs and it having to do more than what it has already done in the way of MSP or otherwise? And is there therefore economic profligacy risk that Indian markets run?
Let me answer that in 2 parts. If you look at our budget deficits over the last 20-25 years, they follow a very predictable pattern. For 2 years after general elections, budget deficits fall. And in the 2 years running up to general elections, budget deficits rise. It's a very predictable pattern. It doesn't matter who's in charge. So I doubt that pattern will somehow change in the current dispensation, or indeed whoever comes to power. I think it's a very predictable political economic cycle that our budget deficit takes. Secondly, leaving aside whatever happens in the assembly election results, if you have food inflation at negative levels 4 or 5 months prior to the general election, any government would want to spend money on rural. Food inflation at negative territory 5 months before general election really is remarkable, and it will require attention on the government's part, regardless of how the assembly polls pan out.
Interesting. Well, let's get in a view from Sanjay Pugalia as well. He's a veteran, has seen many of these election cycles. His opinion would be worthwhile. He's editorial director at Quint Media. Sanjay Pugalia joining us on the phone line. Sanjay, thank you so much for joining in. Firstly, just some bit of advice from you. Looking at the exit polls, the way they have come out, would you believe that because it's so close, it's best to wait for the eventual verdict to come out? Or would you believe that based on the exit polls itself, there is a higher probability of this not going BJP's way as a sum total?
Right. This disclaimer should always be there that exit polls may be correct and they may be completely wrong. We have no idea. But since we make some opinion based on assumptions and data and public mood and our own conversations, the sum total of that, from my own understanding, is that the overall result of this round is going to be not positive for BJP. Not even neutral, it is going to be a bit negative. To what extent, that's what we have to wait. Rajasthan loss is almost certain. Madhya Pradesh appears to be very keenly fought race, but the way polling has been conducted, I would say that whoever wins will be winning it emphatically. It is not really neck to neck as in 51-49. It will be 55% seats goes to BJP, to the winner, and loser gets less than 45% seats.
Yeah, because of the swing factor as well. Just how significant from an economic policy perspective, Sanjayji, would these elections be if indeed the verdict tomorrow for the three major states that I'm talking about is either 3-0 or 2-1 in favor of the Congress?
Yeah. So again, based on exit poll numbers, what seems to be the case that rural distress has affected BJP majorly, despite their widely publicized social welfare schemes, farm loan, crop insurance, MSP. It seems things have not worked on the ground. The honest situation is that nobody, in complete seriousness, has addressed the issue of agrarian crisis. India's largest private sector enterprise called agriculture sector is suffering since several decades. This could really cost heavily for BJP.
Interesting.
That will mean it will have current government will have very little time to honestly fix it. I am sure that there will be a serious effort in terms of positioning, posturing. They will be using interim budget to make farmer-friendly announcements. But all these are now, I would consider them to be very, very late.
Raman Singh is touted as being a fairly lucky chief minister, if I've heard all that I've heard over the weekend. But he's battling anti-incumbency in the manner of speaking as well. How big would that be? Because that's also a part of fairly crucial Hindi heartland that the BJP would stand to lose if they lose out.
Yeah, so broadly speaking, Madhya Pradesh and Chhattisgarh may show similar trend. Chhattisgarh, again, you can always say that 15 years anti-incumbency, even though both the individual chief ministers, Shivraj Singh Chauhan and Raman Singh, were quite popular. But again, agrarian crisis and clubbed with unemployment and the disconnect in what government or the current political leadership in Delhi, Chhattisgarh and Bhopal or Jaipur, they are saying, and what people want them to talk about or the issues that they want politicians to address. There is a huge disconnect. That election may actually underline that very, very effectively. On Chhattisgarh, to be precise, my assessment would be that, again, whoever wins will be winning emphatically. There will not be any neck-to-neck losing or winning by 2 or 5 seats. It will be simple majority plus. And it seems that Congress has an edge in Chhattisgarh also.
Sanjay, good morning. Devina here. Just one question from my side. While a win for Congress will be a shot in the arm for the party in the run-up to the 2019 elections, what does this do to their claim of them being the natural pivot for any possible pan-India alliance against BJP?
Look, if Congress is winning only Rajasthan, that won't kind of position them to be the leader of the opposition alliance. Rahul Gandhi must show that he can really win another state. If that is the case, then Rahul Gandhi's position really dramatically improves from where he has begun. And opposition parties will have to deal with resurgent Congress. The other thing I want to highlight here is because markets will again start talking about a possibility of hung parliament, BJP not getting majority and coalition regime being thrown back at us. You will soon hear commentaries from various experts and research houses that coalitions aren't necessarily bad. I am not indicating which coalition. All I'm trying to say that people will now brace themselves, including markets, for a coalition throwback. So yeah, Congress will get a leg up, but they have to show much more than only Rajasthan victory. Then only Congress consolidates its position. Otherwise, the whole negotiation against NDA will be quite acrimonious going towards a Lok Sabha election.
Well, I see, Mr. Pugalia, you have a keen eye for equity reports as well, and that is always good to know. But thank you so much for taking the time out and speaking with us today.
Thank you.
That's Sanjay Pugalia, Editorial Director of Quint Media. That's an interesting point too, Saurabh. You made this point that the global markets are probably the bigger overhang. But the fact that even if there is a drubbing, and even if we enter a coalition government, it hasn't necessarily been bad. In fact, Prashant Jain the other day when he was with us pointed out that just a statistic, that not a single financial year when the elections have been held has ended in negative returns for the market. So we make a lot of brouhaha, but from April to March of the financial year, there's not been a negative.
I think there's a reason for that, right? It's not as if Indian politics is divided on left versus right in traditional economics line. It's not as if our main political combines have some fundamental economic policies on which they disagree. If that was the case, you'd lose sleep as a stock market guy. But it's, from what I can see, it's half a dozen of the one and 6 of the other. So economics has never been, at least for 20 years now, economics has not divided political parties. Let's hope that continues, so that we as market participants don't have to fundamentally lose sleep on who's winning the election or is anybody winning the election or not. We carry on investing sensibly in high quality companies, and the economy chugs along at say around 7% real GDP terms. It would be great if the 7 was 9, but hey, that hasn't been the case for the last 20 years, and it would be foolhardy to presume it'll suddenly happen in the next 10 years just because somebody or the other wins the election.
So what would your strategy be as an approach to Lok Sabha elections?
So I think the strategy is same as we were discussing on your channel a month or so ago. I think the rupee looks likely to stay weak, perhaps weaken further to 75 odd. The IT companies have benefited so far. I think the IT companies continue benefiting from a weak currency. The pharma companies haven't yet benefited. I think there's a long overdue benefit coming to the pharma companies. Furthermore, as the early signs of a capex recovery kick in, well-funded banks which have good tier 1 levels in the private sector, I think stand to have a good couple of years ahead of them. I think those are the 3 pockets of opportunity. The FX-driven plays plus well-funded banks. I think the NBFC high water mark is long past us, and as NBFCs pull back over the next couple of years, the well-funded private sector banks will take over market share and benefit from that. So buy quality in these sectors and buy them regardless of what happens in the election. Honestly, it's just a lot of hoo-ha. It's great drama. I love the drama. It's great fun to watch programs like this. But as a stock market investor, I'm not going to lose sleep beyond a point.
Anything that you feel, irrespective of who comes into power, the electoral agenda for each of the parties and how they individually will impact specific sectors?
I think the one call which is hard to make is black money and real estate. It is clear that in the last 4 or 5 years, black money and real estate have receded somewhat. Will there be a comeback by real estate is a question that keeps popping up. To my mind, I don't think there will be. Residential real estate, I think, remains fundamentally overvalued in our country. And with the NBFCs and housing finance companies pulling back because of balance sheet challenges, I think there's a further correction in residential real estate due, which in turn suggests liquidity flows into the financial system, stock markets stay in reasonably good shape over the next couple of years. But if something happens in Indian politics, which brings black money back into the equation and residential real estate back into the equation, that could have a bearing on stock markets, because it is seen as the residential real estate is seen as an alternative conduit to invest beyond the stock market. Unknown at this juncture, no party is going to talk about it obviously, but I think that's the one thing to look out for if you really want to discern stock market trends from elections.
Well, let's try and put more perspective. And Saurabh, I want to react to some of the comments made by our next guest as well. He's Mr. Krishna Prasad. He's political analyst and former editor-in-chief at The Outlook. Joins us right now in the conversation as well. Mr. Prasad, thanks so much for taking the time out. The conversation thus far that we've had is essentially on what exit polls are suggesting, and both are experts, Sanjay Pugalia as well as Saurabh Mukherjea. believe that the election outcome need not necessarily have a big bearing on the economic policies. Do you beg to differ? And if there is any combination that could happen in the current state elections which could have a bearing on how the economic policies may change materially in the run-up to the Lok Sabha elections?
Well, thank you for having me. I'm a bit of a contrarian on this story, on the impact of politics on economics or of the politics on the stock markets, because I do think that these last 55 months have kind of basically been counter to the script that was suggested when Mr. Modi was coming in. So the short answer to your question is, maybe if there is a change, in 2019, perhaps it's going to be for the better, not for the worse. One. And secondly, I think the exit polls as of now seem to clearly suggest to me that the chances of Mr. Modi being a one-term prime minister are increasingly high, regardless of whether there's an alliance or not an alliance. The fact that Mr. Modi has lost 25 of the last 28 by-elections, one. Two, that he's slated to lose at least one out of these 5 states tomorrow, suggests that Mr. Modi is on the downswing, one. Secondly, I think a number of steps that he's taken, frankly have no connect between the stock markets and reality, and what you are seeing in these 5 states is a play of reality. The stock markets, the business managers, they all seem to live in a different echo chamber in Bombay. But in these states, and also in states like Karnataka and Gujarat previously, what you have seen is that at the ground level, the people of India are reacting very differently to the kind of moves that are otherwise welcomed by Dalal Street or managers and so on and so forth. So to me, I'm making a very key point here. One is that Mr. Modi increasingly looks likely to be a one-term prime minister. Two, there seems to be no connection between what is happening on the ground and the impulses to which people are reacting on the ground to what's happening in the markets. So I think these two need to be very clearly distinct, because I think if you've seen in these last 55 months, India's poorest, India's most ignorant, India's most unconnected people are making choices which are very different from what we in the cities think are core issues. So I think, there are things playing out on the ground which, sometimes we, just loosely say farm crisis, but there is so much more playing out on the ground, and you're seeing that in all these states and previously in these 25 by-elections so far.
Okay. Fair call. By the way, just as we speak, and I would then want Saurabh to come in on this as well, but as we speak, the Nifty is now down 200 points, so it's broken the 10,500 mark, down 2%, the Sensex 626 points. The Nifty Bank may be holding out a little bit, but clearly that bit of holding out of 10,530, 10,535 has now gone, and we are trading at the lowest point of the day for the index. So keep that at the back of your mind. Just something that I would want Saurabh to react to, but Mr. Prasad, just a comment from you. While we're talking about what will happen, and a lot of people would probably disagree with the point that if one state is lost out of the 5, then it's a negative, because I think a lot of people have made the point that this is the Congress's election to lose. They have the best chance, and if they don't make the best of it, then it's their election to lose as opposed to BJP's to win. But that notwithstanding, the second point that I want to make, which is a bit of a counter here, and which is, what if players like Mayawati emerge stronger in Madhya Pradesh and Chhattisgarh? And the reason why I'm asking this question is that for a Mahagathbandhan to succeed, there needs to be 1 or 2 strong players and the others to be in tow with them. If Mayawati is emerging stronger, and you have a very strong head in Mayawati, you have Mamata Banerjee, which is strong, and Rahul Gandhi would want to be the Prime Minister of the Mahagathbandhan if it takes shape and form. But stronger leaders across might not actually enable the Mahagathbandhan to stay in the run-up to the Lok Sabha.
Well, as you know very well, the Mahagathbandhan is a media formulation, without a doubt. Secondly, on several occasions in the last 5 months, both Mr. Rahul Gandhi himself and several leaders within the Congress party have indicated publicly that they are open to some other person from within this, loose formulation of parties becoming the leader of the next of the alliance. So, whether Ms. Mayawati becomes so or whether Ms. Mamata Banerjee becomes so, we do not know yet. But I think, we in the media are easily playing into the hands of the establishment narrative that there is no leader on the other side, that there's no strong center, that they're all squabbling in different ways. You see, 55 months down the line, given the kind of chaos India is in socially, politically, economically, I think, this thing about whether there's a leader or no leader is immaterial now at this point of time. Of course, the fact that the Congress, if it wins only one of these 5 states tomorrow, tells you that it's a very uphill battle. But, we should hold our horses on whether the Congress will win only one or win more than one. I think, therefore, we in the media need to nuance this a little more than what we are doing at this point of time. It is very, very easy to say that it's the Congress's battle to lose. Of course so, but do not forget that the Congress is the only national party in this country, including the BJP. Whatever the BJP stands now, which is 282 seats or 272 seats, regardless of the fact that they are in 16 states or 18 states, the fact is that the Congress is the only national political party. And even with those 44 seats that they have, they seem to be carrying their ground so far. And in fact, in the last 26, 28 months, have actually, upped their game. So I am not going to buy into this thing that there is no leader on the other side. I'm not going to buy into this thing that, they might win only one state. If they win only one state, great, so what? But the point is that they have shown that this thing of a Congress Mukt Bharat, reprehensible as it was as a slogan, is now falling flat. I think that's a very important thing in this democracy. We are a democracy at the end of the day. We are a parliamentary democracy. And for a national party to say that we want to see the other party wiped out, is a shocking thing to have started with. The RSS itself has objected to the use of the word Congress Mukt Bharat. And I think as we have gone along in these 55 months, increasingly the chances of a Congress Mukt Bharat have receded.
Yeah, well, that's a point well taken. But I must say, it's not just the media creation. I think from whatever little I hear, opposition parties are going to hold discussions on the anti-BJP front in Delhi today. I believe from whatever little I read, Chandrababu Naidu is going to coordinate the meet as well. But just one final question on this, and again, I'm just linking it back to the market. Saurabh, what happens tomorrow is a bit of an unknown entity. I know you mentioned that global markets will take center stage. My question to you is, assuming that the BJP doesn't emerge as the stronger victor tomorrow, and the global markets doing what they are doing, is there a higher probability of the markets drifting lower from the current 10,500, be it 9,500, be it 1,900, be it 10,000? Is that a higher probability?
Let's look at it this way. We haven't had double-digit earnings growth in India for 5 years now. We've got cost of money rising globally. Yes, I know a 10-year bond yields fell in India last week, but compared to 6.4% on the 10-year bond yield roughly a year ago, 7.5 is a significantly higher number. If you have cost of money rising and you've got a punchy PE on the stock market and you've got weak earnings growth of 5 consecutive years, you've got an overvalued stock market. I don't think anybody who's sensible about the Nifty should say that this is fair value. 9,500 to my mind is fair value on the Nifty. Is there a chance we drift towards it? I think there is a good chance we just drift towards it. Will it be more due to global factors than local? I think global will play a bigger role than local. Will something radically change on that market scenario front at the elections? I doubt it. There are challenges around the social setup as Mr. Prasad is pointing out. But I think the challenges in the social setup will persist regardless of who comes to power. Across the world, job creation engines seem to have conked off. It's not just in our country, the same problem seems to have afflicted the West as well. And in our country, alongside the job creation having conked off, we haven't had a capex cycle in 8 years. There seems to be early signs of a recovery in the capex cycle, and I'm 100% sure, regardless of who wins, the capex cycle gradually kicks into life over the next 12 months, 18 months. So I know the politics is very emotive, and clearly as we go into April, May next year, it will get even more emotive. People like me are paid to keep a level-headed perspective about it, and my level-headed perspective is we're in reasonable economic shape, and if the market pulls back by around 10%, there's good reason to start buying.
And the key for that is obviously crude oil, which is keeping everything else in check as well.
So crude oil, it's impossible to make a second guess the crude oil piece, but what was noticeable was how quickly OPEC capitalized on the America-China standoff on Huawei and on the FBI's verdict on the Russia investigation, how quickly OPEC's capitalized to cut back production, pull back production, and try to ramp the price up. So the global geopolitical setup is, I think, more tense than I've seen it in a good 20 years. It's very difficult to remember this sort of eyeball to eyeball between major economic powers in the last 20 years. We used to have this in the 80s when we were in school, but we are back to the Cold War, back to sort of spy thrillers. So if our elections are a local thriller, I think the global spy thriller is the one which will have a bigger fundamental effect on our economy.
Well, let's wait and watch how that pans out. Saurabh, Mukherjea, thank you so much for being with us today and giving us the market perspective. Mr. Prasad, thank you so much for joining in today and giving us your side of the political narrative as well. And of course, Sanjay Pugalia, you heard him earlier on as well. Well, with that, it's a wrap on this leg of Indian Open. The markets are looking very soft, but FNO show will take forward all of that action on the other side. From Devina and me and the team that put this show together, thanks so much for watching.